Excellent. So let us begin the day 3 of the People's Social Impact Conference. I'm your host, Ryan Knight, one of the co-founders of the Afro-Caribbean Business Network, but also a board member of SETSI, the Social Economy Through Social Inclusion. And just before we get into our panel, our social finance panel with our esteemed guests, we always like to begin all things by acknowledging the original stewards of the various lands we are on. We also acknowledge our ancestors. We acknowledge all those who toiled without compassion or compensation. We acknowledge all the elders and community stalwarts whose shoulders we stand on as we build, share, and learn together for our collective liberation and sovereignty. It is a true honor to be moderating this panel. I'll say who we have, but I'll also I'll go one by one just so you can introduce yourself to our audience. I'll start with you, Kelly. Kelly Gauthier, if you'd like to let us know a bit of the background of the remarkable work that you do.
Sure. Thanks, Ryan. I'm Kelly Gauthier. I'm the president of Rally. Rally Assets is an impact investing asset manager, and we work with investors that are looking to place their capital for greater social and environmental impact, and helping them to really connect to different opportunities in the space, whether those are certain asset classes they're focused on, certain impact themes they're focused on, certain regions, and really helping to match that capital.
Appreciate you being here. And Wayne, Miranda, I'll go to you next. You can give us a background of the work that you do.
Thanks, Ryan, and such a privilege to be here in good company with Kelly and others. So Wayne Miranda, I'm joining from Treaty 13 lands, Dish with One Spoon territory. I play a few different hats in the ecosystem. One is with Boann Social Impact on the market building activities. Another is with Catalyst Community Finance, which is a network of community finance organizations. And then lots of interesting side projects, which we might be able to get into. Back to you, Ryan. Thanks.
Hey, my pleasure. And who do I see next? MJ. Is MJ? Did I see MJ come in?
Yes, Ryan, I'm here.
Excellent. Yes, if you could let us know a bit about your background and the work you're doing.
First, thanks, Ryan and SETSI and everyone joining here. And great to see friends and other fellow panelists here. I'm Sinha, settler in Canada, based in Toronto. Like Wayne, I wear a few hats, but I'm moving to one hat now. And so I am the Chief Investment Officer of the BC Rental Protection Fund, which is an affordable housing acquisition fund. But I also, finishing up some of my advisory work, but I also still continue to sit on the board of a few foundations in Canada and the investment committee, through which I like to stay engaged, keep my hands in a few pies. I value intellectual stimulation. I'm just in a settler background for like 10 plus years in impact investing, now in the rental protection fund, and also wear a few foundation hats. And great to see everyone, and looking forward to the session today.
Excellent. And again, it's an honor to have you with us. I do believe I saw Matthias come into the room. If you wanted to do a bit of a background on the work that you're doing as well.
Thanks, Ryan. And sorry, I joined a bit late. I'm on the road and my internet is not great, so apologies in advance if there's any spottiness. But yeah, pleased to be here. My name is Matthias Pries, manager of investments at World Education Services. So we're a global national in the US, but I'm Canadian and representing efforts with a vision to enable everybody to put their education experience and skills to work anywhere in the world. And so we do this primarily through our core business, which is providing academic credential evaluations that enable immigrants and refugees and international students to fulfill their potential in Canada. In 2020, we started investing in a way that is mission aligned, and so I'm responsible for our catalytic investing portfolio. I also wear a few different hats. I'm an investment committee member on a small family office that's 100% dedicated to impact investing as well in Canada. So yeah, pleased to be here with everyone. Thank you.
Excellent. Appreciate you being here as well. And Jillisa, I do believe I saw Jillisa come in. Would you like to introduce yourself and the remarkable work that you're engaged in as well?
Yes, thank you so much, Ryan. Looking clean, brother. Looking clean.
Yeah, every so often, they got to step up.
Thank you so much for having me, folks. My name is Jillisa Brown. I am the executive director of TIP, otherwise known as the Table of Impact Investment Practitioners. TIP is known as the community of practice for impact investing across Canada. We are focused on, building and doing a few things that I'll share with you today. But I also wanted to say that as an Afro-Jamaican Canadian, I also carry around the spirit and excellence of my great-grandmothers, Eliza Brown and Ethel Dennis, in all the work that I do. So just wanted to acknowledge them in this space.
Love that. And as we start the conversation, would love to stay with you, Jillisa, just to get a bit more context around the work that you're doing with TIP and the role that you feel you have in this mission of social finance.
Yeah, absolutely. Personally, the work that I've been engaged in over the past several years has been around building community and stewarding that community. So the work that I'm doing now as the ED of TIP, again, we're focused on being the community of practice for impact investing across Canada. So what that looks like is we have around 80 fund managers and allies in the space that join for capacity building and peer learning. And so, it's always wonderful. Actually, we had a conversation yesterday with the membership about collecting demographic disaggregation. A lot of cool conversations and dialogues coming out of that. We are also one of the shareholders of one of the wholesalers of the Social Finance Fund, Boann Social Impact. And then lastly, we're focused right now on reestablishing the National Advisory Board on Impact Investing for Canada. Around 40 advisory boards around the world. And so we convene with these folks at the Global Steering Group and really get the chance to learn from voice and what's in Canada. So, it's definitely a cool position to sit in, and I'm privileged to be able to convene community in.
Just to mention Boann, and you're one of the front faces of Boann, to get more context on the work that you do and in this mission also.
Sure. Well, maybe I'll quickly speak to Boann and then speak to my role personally. So Boann is one of the fund managers of the Finance Realized Capital, which Kelly is here to represent, and also Cat Finance, who's not here in the room, but special shout out Finance is doing in Quebec. So Boann is in particular looking for high impact communities across Canada, and we're looking to flow capital to otherwise overlooked, underserved areas, impact focus groups, types of assets, individuals who are leading social finance intermediaries who would otherwise lack access to capital. And my role in Boann is very much around kind of building up that marketplace. So it's both looking at working within the system and on the system. So within the system, a lot of my work is building up new and emerging social finance intermediaries. So organizations or initiatives that are looking to raise capital and deploy capital to those overlooked or underserved areas. And working on the system looks like various different shared infrastructure, so information exchanges. It looks like new product innovation, blended finance instruments, which are looking at ways of de-risking or providing appropriate return capital to various opportunities. And so, that's generally what I do on a day-to-day.
Excellent, and appreciate giving that perspective. And so, Kelly, I'd love to go to you next, I guess, as a counterpart to the Social Finance Fund, to learn a bit more about the role that you play in this mission of social finance.
Yeah, thanks, Ryan. And I didn't mention Realize in my introduction, but Realize Capital Partners is an initiative of Rally and Relay Ventures, and it's our wholesaler entity. So as Wayne said, very similarly to the work that Boann's doing, we're one of the 3 wholesalers. We're investing in everything from more mature fund managers that have been doing this for a while, that are really looking to scale, right down to community investments and investing in community in very small and new entities. And so as Jillisa and Wayne were talking about, popping into different parts of that system and thinking about the overall systemic impact that we're creating, as well as building up individual entities and different social finance intermediaries. The other big focus that we have is on the impact measurement side of things, which is a place that the sector generally has struggled for years around how do we do this at a community level with data that is material and relevant to a venture or a social enterprise. within a construct that has been largely top down in terms of its demands for data. And so how do we upend that and create a more equitable way of looking at data that's coming bottom up, but that is able to be aggregated through a system that has so many layers in it, so that we really can get the insights that we're all seeking at a systems level while not forcing metrics from the top down down to ventures. And so we're spending a lot of our market building time focused on the impact measurement and management side of things.
Wonderful. And actually, I'd like to go to MJ next, because I know I was honored to be part of training the Catalyst program that you were running. So we'd love to hear about your involvement in the social finance and how you've been helping people train, and now the current role that you're in.
Thanks, Ryan. Appreciate this. So that's one of the hats that I have recently transitioned, but I think that's very relevant to the conversation. And I had the privilege to work with Wayne on that project. So when if anything gets missed or needs to be added, please feel free to. So I think I'll step back on something I heard from the CEO of Engineers Without Borders, Boris, ex-CEO, many years back, that everyone wants investment-ready deals, but doesn't want to do the work on the pipeline. And I've heard something else also from people. Sometimes folks are looking for unicorns. So Catalyst was an initiative of a bunch of organizations from across Canada, funded by the federal government. The administration was being supported through SVX in Toronto. Wayne and I were the two leads of that project. Wayne is still around. And the three things, we brought together a bunch of place-based funds, so loan funds, community bonds, debt funds, everything from across Canada, from coast to coast to coast, and worked through almost a year. I would say close to like 8 to 10 months of programming around, startup to the capital raise to what happens after. We had folks like FACE, which is a $160 million fund focused on Black entrepreneurs across Canada, to those just in the design stage. So quite the diversity, quite the breadth, focus on capacity building. And three things, focus on capacity building, but three things was the goal, and we were able to get to some of those. One was, of course, the technical stuff, and the beautiful part was that, if I may say, Wayne, on this, like, we brought some skills, but the community itself had so much in knowledge that was the most beautiful part. That our job, what I felt was my job was to, and Wayne and my job was to bring these people together. And something that Wayne is now still leading is, I felt, hey, you know what, you guys, you just stopping to reinvent the wheel is very important. Some people have done the work, so this group now still gets together, and I'm hoping they're able to discuss and learn and grow with each other. So yeah, technical stuff, bringing people together and showcasing them. Having folks in this room who have been Kelly, Wayne, Matthias, everyone has been involved in different stages. I've had the privilege of having some folks from Rally come to one of the sessions there, if you remember. So, leveraging what we have done, our networks, to showcase. And when we step away, so that, investors and communities across Canada can see the great work that's happening. So that was Catalyst. That also ties in with some of my work where I'm a volunteer, but some of the boards I'm on, be it Philanthropic Foundations Canada or Definity Insurance or Makeway, where it's both about investing in, across the stages, so across risk, return, impact stages, but also support on capacity building. So that's the other part that leads to connects with this piece. And then finally, now, similar to what Wayne and Kelly talked about, the fund that I'm running is not a wholesaler, but it is a government-funded organization, arm's length entity from the BC government. But affordable housing is a crisis across Canada. Acquisition is considered one of the low-hanging fruits, but there's not been a lot of movement at scale. So there's been conversations across the country, but three of the largest housing providers in BC came together to form this organization called the Housing Acquisition Fund that got funded by the BC government just over a year back to the quantum of $500 million. So pretty sizable. But again, it's real estate, so you can get all that money out in 10 days.
Yes.
So so we have similar-ish to some. So I'll stop there. So that's kind of like the connection about my past work to what I'm doing right now. Some is a bit different because it's more real estate at BC. It's a different atlas and everything, but quite a lot of similarities. So
Actually, yes, I'll go to Matthias next then. Matthias, we'd love to get context based on the work that you're doing with World Education Services.
Yeah, sure. Happy to provide a little more context. So I think it's important to maybe take a step back and describe a little bit more about WES as a whole. So as I mentioned, we're a nonprofit social enterprise. We've been around for around 50 years. This is our 50th anniversary in 2024. Core business sort of turns over on an annual basis, and the revenue that we generate from providing those academic credential evaluations fuel the work that we do to support the communities that we serve through that core product. So we do that, we do policy and advocacy work for immigrants, refugees, and international students across the US and Canada. We do direct programming, and we partner to provide programming to these communities. We also have philanthropic teams based in both countries, and then the investing, which is where I work. And so we're responsible for stewarding the financial assets of the social enterprise, and explicitly doing so in a way that's aligned with our social mission. And so we invest across asset classes, geographies, and impact areas, both directly through fund managers and directly into early stage ventures. And we also do a lot of ecosystem building work, so partnering with the likes of SETC, with New Power Labs, other folks in the Canadian ecosystem to try to fill gaps and push the field forward. In terms of my work specifically, so I'm responsible for what we call our catalytic investing portfolio. Personally, a bit biased, but I think this is some of the more exciting pieces of our work. So what do we mean by catalytic? It means investing in really patient, flexible, and risk-tolerant capital into opportunities. It's investing across a range of financial return profiles. So, we might do really, low interest debt through a community development financial institution up to a market rate, whatever you interpret it as, venture fund. It also means that we're investing in a way that's impact first, which means we screen all opportunities first and foremost for alignment with our mission as a social enterprise. And then we'll sort of, if they meet that impact bar, then move forward. So we're an impact first investor, and we're also an investor that is looking to invest in opportunities and communities that have been, historically overlooked and underinvested in, and demonstrate some new models of investment and crowd in additional capital. So really sort of being that catalytic investor, writing early checks and looking to be catalytic in our underwriting. So maybe I'll pause there, but I'm seeing tons of alignment and really excited to hear about initiatives that our panelists have.
Yeah, but I'd love to stick with you just for a sec to learn about what collaborations you've seen or initiatives that could really amplify your work.
Yeah, happy to. So, I mean, as I said, like partnership is a massively important component of our work. As you can imagine, the sort of breadth of our investment mandate, we invest, across many sectors, investment structures, asset classes, geographies. So, we're a small team, and partnership is a crucial sort of part of our overall strategy. So we have a dedicated partnerships team actually that works with both our grant making and our investments team that actively looks for ways to sort of collaborate, pool funding, and push the field forward. One strategy maybe I'll highlight that we've taken of late has been to partner with accelerators. So in 2023, we partnered with Village Capital and funded an accelerator for ventures that were specifically providing climate solutions that have impacts on vulnerable communities, including migrants, including communities of color. So through this accelerator partnership, all the participants, all the ventures that were inducted into the accelerator program received a grant from WES, as well as mentorship and a tailored curriculum that was delivered by Village Capital. And then what was really interesting about this program in particular is there was a participatory investing process whereby representatives from each of the 10 ventures in the program selected 2 of their peers to then receive an investment from WES at the end of the accelerator. So, we gained exposure to some really high impact ventures. We shifted some of the power of the investment decision-making process to those who, are closest to the issues. These are the entrepreneurs who are working on the issues themselves. And so it's sort of had impact in both what we're funding, but also how we're funding, which is a crucial sort of element of our impact investing strategy. So we're just finalizing the terms for those two peer selected ventures now, and really excited to support them moving forward. And similarly, in 2024, we're partnering with Techstars, and we're doing so in collaboration with some foundations in the US. And so we're funding a 3-year initiative that will support 36 early stage ventures. Techstars is a pretty world-class accelerator. And the theme of this one will be workforce development. So supporting ventures who are working on solutions related to sort of quality education, training, career development, employer solutions. So yeah, equally excited about this. And I think there's a lot that comes from these partnerships. It's capacity for our team, obviously, which is huge. It's diversification of our portfolio. It's supporting a large array of early stage ventures. We're also trying to push the field forward a little bit in terms of, for example, the Techstars program. Not a lot of the Techstars accelerator programs are impact focused, and so in our cohort, every venture that comes through there is going to get impact measurement and management training. Everybody's going to have a theory of change related to the impact. They're going to have to map their impact pathways, and so we're trying to push the likes of global players like Techstars forward and embedding impact into their curriculum and thinking as well. So there's a lot of different strategic elements at play with this work.
Excellent. And say hi to Sunil for me. I'm a big fan of the work that they do. But Jillisa, I'd love to come to you next. I feel TIP is the embodiment of collaboration. So to get your feedback on what more collaboration could be used, or what other initiatives could really amplify your work?
Absolutely. I think that, we're sort of in a point where in our ecosystem, from my perspective, where we were coming out of working in silos and trying to figure out how to do things collaboratively. But I would still say that what the ecosystem is missing is a lot more of communication and coordination in regards to, the type of things that are going on. I think that, what I'm hearing is that there's might be overlap or duplication of, some of the work that's being produced. And so I personally think that within the ecosystem, there are certainly more opportunities for the community to do things more collaboratively. One way that TIP is working to build space for that is through the National Advisory Board on Impact Investing. And so this is a space where we're looking to bring together stakeholders from across Canada, looking at the different pillars of the supply of impact capital, the intermediation, and the demand of impact capital. And seeing how that sits on top of the government as a foundation. So that is through like the guiding force of the GSG. And so that's definitely one way that we're looking towards, rebuilding that sense of collective collaboration and where the ecosystem is moving together. And so that's one way. And then, with TIP, of course, there's always opportunities to collaborate. So interestingly enough, I actually just had a meeting with Ryan from Rally yesterday about, the possibilities of being able to collaborate and bring in some impact measurement curriculums into what TIP is building. So basically right now, TIP is working on bringing together an intermediary academy. We recognize that there's a lot of, accelerators and spaces for funders that are, maybe early stage or maybe more advanced, but what we're finding at TIP is that a lot of our fund members or fund managers are kind of at the intermediate stage. They're almost, at that point where they're developed enough to receive social finance funds and many other types of products. And so within that intermediary academy, we said, okay, you know what, we know that there are other folks that are focused on impact measurement, for example. How can we speak with these people and, instead of creating something on our own in that silo again, let's work with the folks that are already doing the work, that are already building the curriculum so that, TIP is not doing the same work that Rally is trying to do, which is not doing the same work that the Catalyst is trying to do. And, so we definitely are looking forward to creating more open pathways to, that collaborative and collective thinking. I think, the Canadian government is at a space where, yes, we finally been able to roll out the social finance fund, but, there's still a lot of questions about how the ecosystem is working together. And so if we don't take these opportunities to do things collectively, the government is going to remain confused. And, it's so important that, as we come together and build a collective voice, that we're doing that together. And, one organization is not going to say one story while another is saying another story, and, making it an even more confusing situation that we're experiencing.
Appreciate that perspective. And Kelly, I'll go to you next, as you like social finance is rolling out through collaboration. So I'm curious what initiatives or further collaboration you'd love to see to amplify your work.
Yeah, I mean, I couldn't agree with Jillisa more. And I think the government came to the Social Finance Fund with very much a mindset of sort of this being a market-based initiative. And I think we all surprised them with our collaborative nature. And from day one of this process is, once we got to some selected wholesalers, all the wholesalers have been working together very closely from the beginning. And, even just hearing the way that Jillisa and Wayne are talking about different activities, we've all worked together for years. And so we all had a good collective sense of like where the gaps are. And we could have all gone in and saying, we're going to fix all the gaps, and Boann's going to fix all the gaps, and Cap's going to fix all the gaps. And then we would have been running in parallel in all these different ways. And so that sense of collaboration and those pre-existing relationships allowed us to come at it from a really different way, to say, Realize can solve one gap on behalf of everybody and make sure that everybody has a seat at the table and that we're collaborating in that. Boann can solve a different gap and work on, hub and network building and those types of pieces. Tip's going to play a role, and all these actors outside of the wholesalers are really important for the overall kind of systems participation. There's a bit of a fine balance though between, not having too much control in the system and having that be disaggregated enough that folks can do what they want to do, that they can do their own business, that they can have a good sense for what's out there, and then they can react to that. And I think that's the part that Jillisa is talking about, is understanding a bit better where the gaps are, who's doing what. And if we have a clear kind of system map of what's out there, then you can still allow that innovation, and that there doesn't end up being a sense of control of the market, which is not what anybody's seeking, but more coordination. Right. And so that we know what each other's doing, we can react to that, and we can act in spaces where there's opportunity and need. These problems are massive, and none of us are going to solve them on our own. And so I think there is really, beautiful will and motivation to want to work together, but also work on things that matter to you, that are relevant to your community, and where you feel like there's some space to grow and not do what other people are doing. And so that's sort of the delicate balance of this collaboration piece.
Yeah, and I love that take on it, where you do want that space for people to be able to be flexible and creative, yet not chaos. But Wayne, I'd love for you to continue even in that vein with the types of collaboration that Boann has been doing and what your work with Catalyst, and see what initiatives could amplify your work as well.
Sure. Yeah. I mean, I couldn't agree more as well with Julie saying what Kelly's saying. I think even just in like how I've structured my professional life, it's very much in the in-betweens. It's working on trying to break down those sort of silos and organizational boundaries so that you can actually foster more collaboration. And so this is why I've got, those sort of few hats. I was actually kind of thinking about your question, and maybe I'll just hone in on a very practical example of how Boann is looking at partnerships. So as I was talking a bit earlier about, we're looking to spur new investment activity in otherwise underserved areas, and a lot of that sort of thesis is around, the creation and building of new intermediaries. So those organizations that are going to raise capital and deploy capital. And in those early days of starting up such an intermediary, cash flow is really tough. So they tend to be small sort of funds, let's say between $1 and maybe $10 million sort of fund sizes. And the way the economics work of such a business is that generally your revenues are sort of proportional on that fund size. And so what we're looking at is how might we look at products or innovative sort of solutions to bridge that sort of cash flow gap in the early days. So when you look sort of more traditionally, something called general partner or GP investing or GP stakes. It's actually a huge multi-billion-dollar sort of industry. And so what's the equivalent or what's the actual more appropriate set of tools for the social finance or community finance sector? And so we're kind of playing around with recoverable grants. We're playing around with like operational loans that are forgivable based on different sort of triggers that seek to then sort of bridge the cash flows of these sort of early stage intermediaries. And the social finance fund is a great opportunity, but it is also time bound. So when we're looking at deploying our capital, we want to think about how can these innovations, how can these funds that we're looking to help build be continue to exist and continue to have the impact and even grow their impact even beyond what we think is a long term, but it's it's going to run by, it's going to fly right by the 15 years of the social finance fund. And so we can offer this product, but wouldn't it be better if we can partner with, say, other financial institutions, credit unions, or other providers to also uptake this product? And so what would our sort of pathway look like there? So, there's kind of like maybe 3 rungs. My ideal is that they just start doing it, but that's unlikely. There's a reason why it doesn't exist right now, right? So how might we de-risk it for other institutions? Maybe we provide guarantees, or maybe we provide sort of a playbook, or sort of like do all the legals around it. And then, third rung is we just have to do it ourselves and sort of demonstrate the ability to kind of roll this out, and then uptake can happen thereafter. So, I think partnership is kind of built into that approach, where we're trying to work with the different, say, credit unions or other financial institutions or funders, investors, community foundations, and so forth, who can provide this on a more ongoing basis. And our role then would be, how do we de-risk it? How can we take, sort of buy down the risk of like creating such a product, demonstrating how it can work, running it through a few different funds that we are looking to invest in. And then maybe that is an ongoing product that's just now available in the marketplace.
Oh, excellent. And would love to go to you next, MJ, because as you're going into a new role, I'm curious the learnings that you're taking from Catalyst to now amplify the work that you're doing in real estate now, and would love to learn or understand like what initiatives would you want to see, or what collaborations would you want to see that can amplify the work that you're currently doing?
Thanks, Ryan. I just want to say, echoing everything obviously that folks have said before this on a bunch of topic. I think what I've been reflecting about my work, because I've been in impact investing for 12 years. I was thinking from microfinance in India to Canada and all the work. And after microfinance, most of my work had been more generalist, which is something I enjoyed, and it's been fun. But getting deeper in the real estate side, I'm just reminded that what got me into microfinance many years back, and I'm just reminded of that, ensuring flow of capital is as close to communities it's needed to serve, I think is very important. Otherwise, and I'm seeing that in housing too, there are sometimes, I wouldn't say biases, but I had my perceptions. And the fund has already committed $170 million. Premier announced the first deal, and when you read all the the investment materials that come from them and their work and the track record, it's phenomenal. So much goes back to I've invested in funds like Windmill or Raven, and a lot of those have been which is Windmill provides loans to new Canadians upon their accreditation. Raven Indigenous Impact Fund is North America's first Indigenous focused private equity fund, and all of them have tried to remove the perception of risk. So that's something that I just continue to feel strongly about, that risk management. Now the reason I'm saying this is I'm thinking from my other hat, where I've been on the asset allocator side. Unfortunately, I don't have that kind of money, but I have been responsible for managing money, or being on the boards and stuff. And often a lot of decision making ends up becoming on perception of risk versus actual risk. So a continued reminder that be it my work in microfinance or rural India that had 100% repayment, or what I've seen over the last 7-8 years through Windmills and the Ravens, is the same thing I'm seeing in this work, that communities, there is strong work, there is strong leadership, there is strong work that's happening, things that will actually align with an investment portfolio of a foundation or of a pension plan, based on how you you need to be a bit creative and imaginative, but I think there is a lot of alignment, and you provide capital, and people, will do good work. So I'll say this was Sir Ronald Cohen of the Global Steering Group, and I had the privilege of working for them many years back. And he said, people want a chance, not charity. So that's my continued reminder that a lot of perception of risk, but when you give people a chance, they do great work. There's a lot of capacity already. So it also goes back to someone shared this on LinkedIn. Someone was like, oh, everyone talks about capacity building in the housing sector for non-profits. This is our capacity. Hundreds of thousands of units across Canada that they have managed and owned, right? So removing some of those perceptions, allowing more closer flow of capital to communities, and then seeing what happens, and it'll work. And then from the other side, continue to think, when you're an investor, continue to think that say someone told me like a windmill is not it's not a rated, it does not have Standard and Poor's rating, but windmill microlending has lower, of what I remember in the past, lower default than some of the bank lendings. My point is, there is sometimes you also have to think how you look at some of these investments differently from an analysis standpoint. So I'll stop there. Otherwise, I have a lot of things to say, but I think that's kind of my some readers. I'll stop
really
there. I hope I made some sense.
Yeah. Do you know off the top of your head if there's any studies or reports? I saw a question in the chat that talk about investment is no less risky than traditional venture as opposed to other investment models? Or is that work still not fully formalized yet?
I'll let others weigh in, and Kelly and Matthias also add, because they will have a lot of experience on this too. But in my experience, things like, for example, Windmill, their reports are public, like how some of the reports on their default rates and everything, and you can go back, compare to the market. I would say purely on the impact side within Canada, I would say things have picked up in the last few years. So when if you think of the fund side, private equity, venture capital funds, money comes back. Realized returns are when the money is in your bank, right? Like the money has come back. So those things are evolving, but there is good progress. But similar work I've seen in India that I've invested in, fund called Avishkar, fund called Leapfrog. These are fifth, sixth, seventh fund that are creating great impact across rural India, parts of my province where I come from, and in Eastern India, and generating really good returns. So I think, yes, there's a lot of information. I'll put a link for this organization called Cambridge Associates. That's an investment firm that has done some of this work in Canada too. Windmill is an example. They've been doing this. They have a track record. They have been providing the capital back to investors. And there's so many more. Tapestry Capital that designed some of these products. Raven has, first fund one, because I've been invested through one of my previous hats. They have realized return. So I think the extreme, I'll give examples of other places that I said, which has been proven. Canada, I think it's building up, but there are enough examples to show that it is working. But I think others would also have a lot more to add. So, but I'll stop there. That's my point.
Yeah, appreciate that. And Kelly, I did see you put an answer in the chat. Did you want to just touch on it real quick?
Yeah, just further to what MJ said, yeah, I would check out the GIN. So the Global Impact Investing Network has really good data. They have, I would say, probably the best kind of broad-based global data. Canada doesn't have great data that just looks at Canadian returns. The global data, I would argue, is actually more valid anyway, because we have longer track records outside of Canada than we do inside of Canada. So you can see where because in the private space, we're talking about very long-term investments, you need markets that are further ahead of ours to be able to see that exit piece. But there's data in there that shows, target returns versus mean returns. So what returns actually came on an asset class by asset class basis. And their last set of data had mean returns above the targeted returns in every asset class except for cash. So the data is out there. Like all the specific examples that MJ's talking about are really valid, but sometimes that broad-based data is really useful depending on who you're needing to present it to as well.
Wow.
Quick note, I saw the question after, if I can, less than a minute, is what I've observed is, data helps to some point, but it's often that, people come from different there are few people in the between of like impact investing, like the social aspect and impact, social aspect and the finance aspect. And often people are on those extremes. So data can help prove that, but often I've seen, and with like not a bad intention, just what people are used to. So the perception of something, they're like, oh, it is not this, it's not a government bond, so how can it be secured? Right. So I think that's been a bigger piece around, mindset. And I've been an advisor, but I've also been on the boards and investment committees. And that's the bigger struggle, that there is enough data. But even the deals we have done, some of the deals I have done on overall portfolio level are actually, I think, going over benchmarks. But it's funny sometimes, depending on the particular board I sit on in the US of a private foundation, but a very large foundation, which is very investment people, they still put it in the concessionary bucket. Whereas this is realized return of 13% plus. In between debt and equity, you're doing 13% plus, but it's still in concessionary because the capital also comes from a family which ran one of the largest financial institutions in the US. So that's I think my reflection. The data will help, but I think it's a perception and it's a journey, as people say. I get sometimes impatient on that journey, but it is a journey. So I'll stop there. I'll pass it to Wayne. I think he has his hand up, but I'll pass it back to Ryan.
And sorry, I know I'm kind of cutting in before Matthias, but just wanted to speak into this conversation. I think a couple important things on this kind of return piece, which is so like it's not, in my view, it's really hard to do an apples to apples comparison for two reasons. So, I think one, the risk of not doing impact investing is often not considered. So like, what's the risk of actually not making the investment in a particular opportunity that is going to have both social and environmental outcomes? And on the flip side of that, there's so many risks that traditional investing does not consider, or even just the real externality costs. So, I think for that reason, it's so hard, I'd say, just on a return basis per asset class, to really think, is this actually a meaningful comparison or not?
And appreciate. And Matthias, feel free. I don't know if you want to add to that, or I was gonna ask you about other key priorities that you're currently working on in this space.
Yeah, no, I thanks, Ryan. I do have sort of some follow-ups as well. I think it's also, I agree with everything the other panelists have said. I think it's also important to not treat impact investing as a monolith, right? It's not an asset class. It's not a monolith. Impact investing is many things. It's both a philosophical and a practical approach and strategy for investing. And I think it's important to acknowledge that there is evidence and data that support impact investing strategies and asset classes that can provide market rate returns. But it's also equally important to acknowledge that we need capital that is playing along the spectrum of financial returns, and you can have equally impactful opportunities to invest in across that spectrum. And so I think it's just important, I think it's most useful to talk about returns comparison on like an asset or even sub asset class level. So just and maybe an additional note for the person who answered that question. I think I saw in the chat that she's an angel investor. So, I think probably most useful to look at, early stage VC and impact and compare specifically at that strategic level. But yeah, to your point on sort of key priorities. So we have several impact areas that we're focused on. One is opportunity. So this is where we're advancing opportunities for our priority communities to gain access to things like quality education, quality jobs, training and supportive services, and then also access to financial systems and services. So that's one big, massive bucket. That's a big priority for us going forward. And another is wealth. And so this is about enabling folks to build an asset base through a few key levers. One is employee ownership. So owning a piece of your own business has been a proven strategy to build wealth. Another is home ownership. So love the work that MJ is doing. Home ownership is a massive, maybe the most important lever to build wealth for families. So also looking at a lot of different opportunities within the home ownership space. And then also, I think MJ was talking about communities and the importance of sort of home ownership or real estate ownership at the community level. And so we're looking at some opportunities within community owned and community governed real estate as a way to build wealth, not only for the individual or for the family, but for the community as a whole. So those are a few key priorities. I say we're we're relatively early on the journey of impact investing. So we started investing for impact in late 2020. We now have a portfolio of 25 investee partners. Over half of those are fund managers, all of whom are emerging fund managers, and then a quarter are early stage ventures, and majority of those are first time founders as well. So a priority for us going forward is continuing to support folks who are doing this for the first time, who may not have track record in the traditional sense of track record. We're trying to disrupt the industry a little bit by saying let's take into account more things than your fund 1, 2, and 3 to count as track records. So trying to support folks who are doing this for the first time. So I think some of the initiatives that Wayne was talking about, that MJ was talking about supporting folks to build these things, we want to be there with capital ready to deploy as they're being built, when they're built. So that's a huge priority for us going forward. We also are keen to continue to build our Canadian portfolio, and currently in diligence with several opportunities in Canada. South of the border, a hugely underserved population that gets a lot of media attention is undocumented migrants. They're a massively underserved group, and we're actively looking at how do we support not only the undocumented migrants themselves in the US, but the employers who employ them in the tricky legal situations that are involved there, right? How do you invest responsibly in a fiduciary way into employers that employ a lot of undocumented migrants, and how do you create pathways for those migrants to also become citizens and gain access to critical services. One more that I'll speak to is the Islamic finance space. So in Canada specifically, there's been a huge growth in the Muslim community. A large number of these folks are first or second generation immigrants, and despite the growing population and everything that they bring to Canada, Islamic finance is a relatively underdeveloped market, and so these folks remain underserved. I think there's a decent number of mortgage options available, some wealth management options available that are Islamic finance friendly or compliant, but we're looking at how to support other solutions in the market that can serve this group, and we want to support solutions that'll sort of bridge that gap in the market. And so bunch of priorities for us going forward. We're also keen to find ways to partner with the social finance fund wholesalers, and in active conversations with everyone on this call. So it's great to see folks again, but yeah, looking forward at collaborating going forward, because I think there's a ton of synergy between us all.
Love that. And Jillisa, I'd love to hear from you about key priorities that TIP, or you're working on with TIP, and even some calls to action for the audience on what we can do to support your work.
Absolutely. So I am actually dropping a report in the chat box right now, the Impact Task Force report. I'm hoping that can give you, just a little, oh, I hope I'm not frozen. No, we good?
So far,
can you hear me?
You're good. Yes.
Okay, perfect. Okay, so I dropped a report in the chat box. This is from the Impact Task Force report from 2023. Jaswinder, I'm hoping that, this can give you, some information that you can bring forward into the work that you're doing. Again, initiatives that TIP is working on. I feel like I've mentioned the community of practice is definitely a big call to action. If you are someone that is looking to do a deep dive into the conversation and dialogues that are happening around the table with other fund managers, even if you're not a fund manager, there are researchers and individuals that are also interested in this work. There's definitely space for you at the TIP table. You can become a member. This year, again, we're really looking forward to launching our Intermediary Academy. And so, it's an opportunity for folks that, need a little bit more of that capacity building within the space to learn with us. And then the relaunch or reestablishment of the National Advisory Board is a really huge one. We're actually looking forward to doing a relaunch event this year that really brings folks to have those deep conversations. I think that, you know, as we sort of progressed through social finance in the last couple of years, it's been a lot of like, you know, a lot of context, a lot of understanding, you know, what's going on, but we understand that folks really want to roll up their sleeves and get into what really matters. And that's the impact that's being created and being able to connect those dots. And so if I can give an example of, you know, something that's happening globally that, you know, we've been having conversations around is impact weighted accounting, and, you know, how that, if that's something that makes sense within Canada to do and how we can collectively do that together. And so again, being a part of those conversations, there's definitely be opportunities for everyone. Again, I think that within social finance, we've been having a lot of conversations around the intermediary, and we're certainly excited to ensure that the demand is a bigger part of that conversation, as well as, you know, the work that we're doing with the government, ensuring that the government knows the roles that they have the opportunity to play, whether that's through ESDC or Global Affairs Canada. You know, there's definitely plenty of opportunities for us to engage this year.
Excellent. Appreciate enlightening us with how we can actually get involved. That's great. And MJ, I'll go to you just to get your closing thoughts and some, if you have calls to action for how the audience can support your work or at least follow along.
Thanks, Ryan. To follow along, I'll put the link to the organization in the chat. I would say, you know, to support the work, the biggest piece would be, and this is independent of where the capital goes, but there are a few uh, proposals that have gone to the federal government around, you know, a national acquisition fund. And this is, you know, affordable housing is a pan-Canada crisis, unfortunately. You know, who manages it, what it goes, different thing. But there was an article that BC Business did on me, and I did say that, you know, if in a G7 developed country, quote unquote, if we can't take care of our people's basic need, you know, food, shelter, health, education, then I'm not really sure what's the point of our prosperity. So more awareness about affordable housing. I'll put the link to the organization in the chat. There is a Canadian group that's actually doing the same work for a Canadian Housing Acquisition Fund, but more awareness on this and more lobbying to your, you know, your MPs and your MLAs, your MPs and your MPPs around this, and your municipalities, to ensure that there was some coverage about the rental protection fund yesterday. And I just mentioned, you know, this is the starting point. A safe, stable home is a starting point to, you know, it's such a basic need and a starting point towards, you know, resilient society. And the absence of it is actually societal risk. It's not only just, you know, what we are seeing in Vancouver, parts of, or wherever. So all I'll say is I'll put the link in the chat, and for housing specifically, you know, more awareness, pushing at all levels of government about the role they can play. Foundations and social finance fund and people like us, of course, we're going to do our part. But where this is my personal opinion, of course, is where government should intervene. I think they should play a role. And on if I may also make a more broader call to action, it's great to see a lot of participants here. Some questions is more awareness and thinking about, you know, what's happening with your money personally, you're managing as a volunteer or a trustee, and asking those questions around the positive or negative impact, because every dollar has an impact. And just being very thoughtful and conscious and asking those questions, and remembering, you know, like people like myself, and I've been a CIO, I get paid because I'm doing a work for someone. So if I can't make sense to them, then I need to go back to the drawing board. They don't need to get a CFA or an MBA. So for rental protection fund, pushing your levels of government, following what we do, I'll put in the chat. Overall, asking questions, knowing what your money is doing, asking difficult questions, and not stepping back. So I'll stop with that. And thank you again for all the question and for the discussion today.
Hey, this is wonderful. I appreciate your perspective. And Wayne, I'll go to you next just to give your closing thoughts and any calls to action that we can, you know, do to support the work that you're engaged in.
Yeah, I think I'll pick up a thread that MJ kind of started and say, you know, I really get excited about social finance at the intersection of neighborhood and community level. And so I'll just amplify some of the work, like maybe folks can check out Tapestry Capital. So Tapestry Capital are experts in community finance, and in particular have stewarded a number of community bond products. So these are just opportunities for you and I, what's called like unaccredited investors, or not, just like everyday Canadians, to participate in making your capital work for social and environmental purposes and outcomes. And so Catalyst Community Finance is a way to get in, and I will copy and paste Tapestry Capital as well.
Excellent. And Kelly, we'll round off with you to get your closing thoughts and any call to action for the audience to make sure that we're keeping up to date with what you're doing and how we can support.
Thanks, Ryan. I mean, hopefully, the group that's here speaking today represents all sorts of different opportunities in different parts of the impact investing sector. Wayne and Jillisa and I are essentially the plumbing. We work between things, trying to connect things, try to make the system better, opposed to, some of the issue-specific pieces that MJ and Matthias have talked about. But hopefully the audience can see amongst that variety where they fit in. So there's initiatives that are helping, that are here, that are focused on investors uplifted. How do we give opportunity to founders and help allow them to realize the amazing, vision and community impact they're looking to have? There's a layer of plumbing around the fund managers that are trying to aggregate capital to get down to those ventures. And then there are all these other systems pieces that work around it, the capital side of things and how we bring capital to it. Folks like Wayne and Jillisa and I are sort of sitting in the middle, trying to figure out how we pull all these pieces together. And our job is really to make sure that anybody on this call or any other call can see how they fit in. And so, the work that Wayne's doing around the hub and the work that Tip is doing is really around that connection piece of making sure that we're providing the right wayfinding for folks to be able to enter. So what's really important for us, so my call to action is what's really important for us is to hear from you around where we're missing your needs. We can't do our jobs well unless we're really hearing from everybody in the system that says, hey, you missed me, like you're missing this part of it. And you've heard all of us talk about collaboration and consultation and all of that, while still trying to move at a pace that's getting stuff done. Right. And so that's my call to action. We need you. We can't do this without you. And if we do it without you, we're gonna do it wrong. So we need you to participate in the work that we're doing and let us know how we can do better.
Wonderful. And we really appreciate each of you taking your time to be with us and your remarkable leadership. And as we close out, we always like to close the way we began the conversation by acknowledging the original stewards of the various lands we are on. We also acknowledge our ancestors, compensation and compassion. We acknowledge all the elders and community stalwarts whose shoulders we stand on as we build, share, and learn together for our collective liberation and sovereignty. This has been an enlightening conversation. I want to thank our panelists again for being part of the People's Social Impact Conference and bringing this expertise. And the conversations are going to, we have 3 more conversations later today. So take a break. We'll be back in about half an hour. I want to thank you for being present and here with us to kick off day 3 of the People's Social Impact Conference presented by SETC. We shall see you soon.
Thanks
so much.
Thanks, everyone.